if I say strategic emotions to people, what is their thoughts? What do they think? As a question, I'm actually asking somebody to respond. It's not a rhetorical question. So anyone? Strategic emotions.
I think it's the what you mean when you be doing trades, the how you deal with the emotion, like how you strategically set yourself to deal with certain emotion at certain circumstances, kind of that. I think
Yeah.
that's what you mean.
Yeah, no, definitely. It's a part of using, like actually acknowledging that sort of thing. Absolutely. I'm wondering also, being strategic is actually using them as a part of your plan, as a part of your trading strategy, actually saying, okay, well, I'm feeling this emotion. What am I going to do with this? You use it at the start, then it's not going to necessarily going to influence you at the end. So I just thought I'm initially going to start with this because it is something that will sort of continue later on. So with my trading psychology, it is different to other people's in a lot of regards. I don't go through a lot of the same things. I'm assuming that this isn't people's first rodeo. They've been here before. They've done other courses. They don't need me to repeat the same thing. But please actually ask the question if I'm assuming incorrectly. This is about transferring knowledge that you have to a new situation. So everything that I say is actually about transferring everything you have and then perhaps adding things that I might have to that and then using them together. Everything that I suggest, it's just like a big one jumble of information, and everyone's life is different. Different countries, different cultures, different religions. Take what you need and what you can from it, what suits you, and use that in your life. Everything needs to change across every aspect of your life. We're wired a particular way. The only way things can change is if every aspect of your life changes and you approach everything differently. When we do that, we create the automatic responses and those instincts that then affect our behavior. It's also about understanding those biopsychosocial influences. So the things that are inside us, our chemicals, the way our body responds, what external influences there are on us and our decision making, those sorts of things. So that all is a part of emotions and how we use them strategically, what we can do, how we transfer that information, and how we build on what we've done before and what we've had before. So we know pretty much about emotions. We've got our curve, we've got the strategy, we've got all of those things. We know about greed and FOMO and all of those things. I don't need to repeat that. But a lot of people don't understand the difference between emotions and feelings. So emotions are our body's response. They're the sensations we have when we're angry. It's objective, it's there. You're angry, you're not angry, you can't, it is just what it is. They're unconscious generally. We don't understand or we don't realize that we're, say, angry until somebody points it out or until later on when we come back down and we stop being angry. Feelings are different. They're our bias, they're our thoughts. They are individual for each person, and they're something that we think about. So when we think, oh, wow, that trade might not work well, I'm anxious about that, or then obviously there's something happened in our past, or there's something that we're seeing that is telling us that we should be fearful of that. But not everyone is going to be fearful of that. So when we get that overwhelming anxiety and fear, our prefrontal cortex shuts down. And I know there's a lot of people who you can ask them about why they do a trade, and they can tell you everything about certain trades. And then there's other trades, they've got nothing. They've got a blank, and they go, oh, I don't know why I did that. I look at it now, and it does not make sense. Anyone want to give me an example of that?
The wave structure you have done is fantastic on greed and despair and pessimism, desperation. That is brilliant. Brilliantly done, Kerry.
So even if it's not an example that you have actually had, something that maybe you can think of that may actually be an issue for somebody else, as far as something that might happen that may end up with not having any idea of what the trade was. You know, I do know that there's been times when Ben has actually said to me, I don't know why I did that. He can repeat to me everything. He can tell me everything about every other trade, but then there's one that he'll say, I don't know. Anyone else had anything like that?
True every time, all of us probably.
Yeah, well, I know that for sure. I've definitely made decisions where I think, wow, what was I thinking? So what I feel is important is actually finding the link between the emotions and feelings, because they are different, because one helps you with the impulse and the other one helps you with reflection. The unconscious helps you to stop impulse, but the conscious helps you reflect on it to see what you've actually done, it, how to fix it. So if we're looking at emotions and how they affect us, so we've got our behaviors, and we have certain behaviors that certain situations come up with, and in certain situations different sensations occur. So in one situation you might have anxiety, but in a different situation the same event or trigger may actually create a different response in you. So it's a combination of different things, and if they are consistent every time you're angry, regardless of what the situation is, do you have the same behavior? Or is it that a different situation? If anxiety, are you more anxious when you go grocery shopping versus when you are doing a trade? Like when, and if you are more anxious, what changes in your behaviors? What are the triggers in those situations that makes it different? What matters to you that much that it's going to change? And the sensations, of course, that's our biological reaction to different things. So if we look at our behaviors, I have a pretty little behavior wheel here, and this gives you an idea of the emotion and the different behaviors. I mean, you know, this is for kids. I use this for my clients, so it's pretty limited. But as adults, we obviously have a lot more going on. We have a lot more behaviors. We have a lot more complex issues happening. So this is just an example, but it might help being a starting point for people. When we look at our sensations, we're looking at what do we notice. So when you have fear, tight chest, sensitivity to touch. I myself am extra sensitive to sound. I don't like being touched when I have that fear happening. Are your thoughts racing? But sometimes for some people, their thoughts might be racing, but they actually might be clear and they may be actually able to follow them. Different things, you know, shallow breath, butterflies in the stomach, different things for different people, but knowing those things for you are really important. So would anyone like to actually, does anybody think about these things. Has anyone up until this point thought, okay, I know I am experiencing fear because I have these things that I am experiencing right now in my body?
We all on some areas.
Yeah, I do too.
When you actually notice those things, do you register in your brain, okay, I'm experiencing fear now. Why would I be doing that? Why am I experiencing fear?
I think because of the money involved in trading, that's mainly the fearful most part that you lose.
Absolutely. When you're feeling those things, so do you actually think, wow, I'm actually feeling fear right now. Why am I doing that?
Well, I resist the feeling of anxious and fear, but and I do understand that by studying like other psychology, like how they say that that provoke certain part of your brain that go with your survival instinct.
Mm-hmm.
And that is just how our biological built for. And it's like how we back in the day we go hunting and we feel for that. It's the same feeling, because
Absolutely.
money is like the food in the same, because money can buy food. So it's
Absolutely. Absolutely. If I was to say to you, don't think of an apple, what do you think of?
you think the apple more.
Because your brain has to actually represent an apple in your mind to be able to not think about it. So automatically you've thought about it. So when you try and avoid certain things, the fact that you're trying to avoid them means that you've already thought about them, which is, in a sense, it's bringing it on. So rather than actually trying to avoid it, if we seek it out, sometimes we can use it to our advantage.
Yeah,
It's a tricky one.
Kim is saying, yes, Kim is agreeing to that. I noticed this sensation. Kim is saying, yeah.
And it is a hard thing to go, I'm in fear, and fight that biological instinct, because it is an evolutionary instinct to, fight, flight, even fawn. And fawn now being a part of it is that give in and do whatever to stop the conflict. And that is all, it's there and it's huge, and it takes a lot to be able to fight that, and nobody can fight it all the time. So I really like the turtle traders. I'm not sure, I have mentioned the turtle traders before, but I'm not sure if who knows about it. But the turtle traders are the experiment from Richard Dennis and William Eckhart. I think Eckhart is the right way of saying it. In 1983, where they decided that they were going to, or they believed that they could teach anybody to trade just by following set rules and nothing else. So, and this is based on a book by one of the turtles that actually has interviews with the other turtles, because it is actually really hard to find accurate information on this. So what, from their point of view, traders were given the different amounts. Nobody was given the same amount, and it wasn't explained to these people why they were given the amount that they were given. Bonuses that they were given wasn't based on return on investment, which is what everyone expected, but nothing was explained or said. Capital was randomly taken from traders and given to other traders. There was definitely favoritism between the different traders, and of course that created jealousy, competitiveness, uncertainty, a lot of different emotions, and it, based on these traders, even though they were taught to control their emotions during their trading, those particular things actually had a huge impact and influence on what they were doing in their trading as well, because all they were consumed, some of them were consumed by all of these other issues going on, which is why I talked earlier about, or mentioned earlier about, actually all aspects of our life come into play. So as we all know, that for successful trading, there are certain components. We have analysis, composure, which is our psychology, and our execution. So our analysis, spotting the opportunity, assessing the risk, realistic expectations, which I think we all suffer from at times, not having realistic expectations. It's about being data-driven with no guesswork. Composure is staying calm, focused. We feel like sometimes we need to actually ignore certain emotions. And execution is basically taking all of that information and putting it into practice. But if we can't get composure right, then we can't get execution right. So if we look at composure being a part of that most significant amount or component, where it's not the absence of emotion, but the ability to moderate how intense it is and mediate where it is directed and how you use that. Does anyone have any questions anywhere so far? Or anything they would love to add? Because I learn from people as much as sometimes people learn from me.
So like your idea of composure is like stoicism, kind of similar with that idea.
What was that, sorry?
So your idea of composure is similar with like what the stoicism kind of taught about, like how you
Yes.
you're not trying to avoid emotion, but you deal with it in a
Yes,
sense.
it's based on Stoic philosophy. Absolutely. Yep. I love Stoic philosophy. I think it's amazing.
I love it too.
Yeah. All right. So when I talk about strategic emotions, so obviously huge part of that is your composure. So it's using them to your advantage. And of course, for that, you need self-awareness, and that builds resilience. Process. We need to focus on the process of making, say, a trade, not the actual trade itself. We forget the process. The process is the thing that actually makes the trade. Emotions and strategy can be used as a mediator, which is the link between triggers and reactions. So it's anything that influences your decision, whether it be external, whether it be the past, whether it be you feel sick today, anything. And the moderator is how intense it is and what you can do to actually change that intensity. So as a mediator, what can our emotions tell us? Shouldn't have. Okay. That's all right. It's doing its own thing. I must have missed this bit. So our emotions tell us different things. So well, actually, seeing as it's just gone forward and done its own thing, what is it that emotions can do for us as a benefit in our trading, in life? Anyone?
Is disrupt your trading plan?
Absolutely. Yep. What can they do for us in a positive way? What can they actually do to work for us? No one?
Maybe cures excite.
Yeah. Well, they can definitely, they can tell us information that our conscious mind can't. our unconscious mind works at a far greater rate than our conscious mind works. So if we actually pay attention to an emotion, we can actually see that something's going on that we need to at least look at. Yet maybe we have a bias that we're not paying attention to. There's a trigger there that we are being triggered by, or something that we should be looking at in that maybe we shouldn't trade today. Who knows? It's a different thing. Well, as you can see, it is an actual example that I have found with different people, is different people in different environments, in different cultures, in different situations. You can't always distance yourself. So perhaps just don't trade in that.
Hello, Kerry. Can I ask
Yeah.
a question?
Sure.
Isn't it better to keep emotion completely out of it?
No, because emotion tells you information that you need.
I try to keep emotion completely out of what I'm doing. I try to trade emotionless. Just go on the statistics and what you see in front of you.
And that is exactly what this is. It's about, if you feel something, like actually acknowledging the sensations that you're having, so you know if you're making perhaps a trade that's based on impulse, because you're experiencing sensation enough to stop and go, hang on a second, is this an actual real decision based on my strategy, or am I rushing into things? Is there something there that's triggering me to do more? So that emotion, it's not about, it's about being aware. It's about understanding it enough that you can say, okay, that's actually influencing me. I have to leave that alone, or I have to remove that. But at times it can also be that you are actually missing something. And honestly, if you are able to follow your strategy 100% without any emotion, and just like that robotic there, absolutely, that is perfect. That's exactly what you need to do. It's not everyone can do that, and it's very hard for people to do that. So sometimes it's best to actually accept and acknowledge those feelings if you do get them. Yeah, there may be a situation that at the moment you haven't hit a situation where it's going to trigger an emotional response, but in future that may come up, and you may need to actually look at that and stop and go, hang on a second, no, I've got to stop for a moment and reassess. Yeah, I'm one of those people that can completely keep their emotions separate from anything that I do in that regard. But I've experienced through my work, most people can't do that. So if we look at the turtle, sorry.
Can I say something?
Yeah, sure, go for it.
So like you all were talking about either avoiding emotion or embracing emotion, right? And I think in the sense that, yeah, it's true that a lot of people are saying like fully avoiding emotion, like robotic trading, whatever, you know. But then, like you said, which is a very good point, that you embrace your emotion to get the information, because anyway, like this kind of emotion on trading is the very repeatable kind of emotion. You feel the same emotion all the time, right? Like fear, greed, FOMO, whatever, you know. And it's the same set of emotion, and then if you try to avoid it, it'll come back anyway. So I think it's a better way to deal with it by you embracing it, like study yourself and figure out the way to like find a solution to deal with your emotion, because either way will come back anyway. It's like you're not gonna just be able to like avoid it forever. You know what I mean? All right.
Yeah.
So what I think, yeah.
Yeah, no,
On
and absolutely. And there's nothing, if you're able to distance yourself from that emotion, then there's nothing wrong with that. That's fine. But I am a believer that there is things that you could potentially miss out on particular information, but some people have no problems with that. There's a lot of people that are able to completely put it aside, distance it, not have it, follow the rules, and that's fine. It works for them, and that's great. No judgment. There's no judgment from me for any of that sort of thing. So going back to our turtle traders, if we were to, so there were, in the turtle traders, there was some female, they were old, they were young, there were all sorts of different things. We're looking at what sort of things may trigger an emotional response. And remembering it's 1983, is there anything that people think could possibly have been triggers that could cause emotional responses in these people? So being female, age, priorities, motivations, and background. So two females, 1983 wasn't the best time for somebody to enter what was considered to be a very male-dominated world. So by using emotion strategically, say in that regard, a person could use it to be determined, to prove that they're actually able to do these things, to actually motivate them, or they could be so consumed by it that they end up floundering and doing the wrong thing and actually collapsing in a heap. And because they were so consumed by it that it was everything. So there's the same emotion, there's the same feeling, but there's two different ways of using it. And one is not ending up in any way, shape, or form in your best interest. And the other one is actually you are able to use it for your advantage. So age, some of them were young, some of them, because of their age, no fear. You can imagine, I actually have an 11-year-old at the moment as a client who wants to get into trading. And he actually had an accident on his scooter and has spent the last 12 months recovering from a brain injury. And the only thing he can think of is what he's going to do next time that's different. So, at 11, age has a lot to do with how much risk you're willing to take, whether you think of the consequences, whether you have family or not. Do you have a family that you need to look after? Who's relying on what you're doing, what motivations you have, and how attached have you got what you're doing to those motivations and goals? Is everything riding on your trading or not? And if it is, well, that can end up being bad, because if you stake everything into one thing, it could end up badly. It could end up being so much that you end up with that greed. You end up with all of those things. You chase trades. You do all of those things that you shouldn't do because that's everything you've got. And background is very similar. What have we experienced in the past that has actually changed our perspective? I've suffered a lot of trauma. I've dealt with a lot of different things as far as emotions are concerned. So yes, I am able to distance myself from a lot of things. But not everyone has that, and not everyone has had, I wouldn't say the opportunity because it's not great, but what it takes. So where are we? So I'm looking at sustainable success. So with sustainable success, we're looking at adding precision to that. So you have your analysis, composure, and execution, but you want to add precision. So you want to look at exact, and which is exactly what Tyrone was talking about as far as removing the emotion and just, this is my checklist. This is what it needs to be done This is what it is. I'm doing it exactly the way I put it down on paper. Awesome, amazing. If you're not able to do that exactly, or if it's not the best thing to do, then actually using that information can also help you with, perhaps in your analysis, you might be missing information because you've got some bias in a particular way, or you're so anxious and your body is in such a state that you're actually not able to completely focus on exactly what is in front of you in the moment. And that's that, you know, mindfulness, that's being in the moment. That's that process part of things as well. And the discipline, composure, obviously, it's staying calm and focused and being able to use what you have. But execution is also difficult because you have to fight every urge you have to follow that desire, that goal, that I'm going to do better this time, or it's so difficult to put that plan into action exactly as it is, while there's different parts of you that are saying, stop, don't do that, look. All right, so turtle traders again. So this one, it's actually quite cool. There's two particular turtle traders here that I'm talking about. We have Curtis Faith, Jerry Parker, okay, and I will add, this is to the best that I can find. It is very difficult to find accurate information. So Curtis was 19. He received 1 to 2 million. And actually during the experiment, which was 4 years, he made the most amount of profit. He is now worth 0, homeless, and I believe in jail. Jerry Parker is, he somewhere between 200 and 500,000. I'm not 100% sure. He has been considered to be the most successful long term, and he is now worth $2.5 billion. I don't know, pretty good effort. So I suppose if you look at the two of them, and so saying Jerry Parker is actually, he was a family man, he had a kid, he married. Anyone want to put out there what may have actually been different for him?
Was it that he he had no fear at that sort of age and saw some profits coming his way and just got a bit cocky, so to speak, a bit too arrogant in his trades?
Are you meaning Curtis or Jerry?
Was that
Curtis is the younger one, Jerry's the older one.
Sorry.
No, but that's exactly what happened with Curtis. He got cocky. He started with the rules and then thought that he knew better. So there is adaptation and there is just deciding you know better. So Jerry Parker actually adapted and he took the rules, but he didn't necessarily agree with what was being said and what was told. So he adapted. So he actually, so initially they were told that they could use 1% to 2% of their capital with each trade. He didn't agree with that. He had that anxiety there. He just was like, no, that's not right. And he continued to evaluate things until he actually realized, well, that was actually wrong. He believed that it was too much. He actually set himself limits on a drawdown of 5% a day, 10% a week, and 15% a month. And past that, he actually would stop trading. Obviously, either for the day or the week or the month, whichever it was that it related to. If he had 3 wins or 3 losses in a row, he would actually stop trading. So whether that be for the day or the week, it depends on the actual trade progression and where he was. That was so he didn't become overconfident and greedy and try and make money, because he had less money So the desire to try and gain more money was really, really strong, especially considering he had a wife and kids. And he started using trailing stop losses. So he still used the rules that were required for him for the stop losses, but he decided to start using trailing stop losses instead. So if something happened, he actually would still make profit. So I call it a pace trading strategy.
This is sorry, Kerry. This is extremely. Last two slides were extremely brilliant. Yeah, everyone knows Curtis and Jerry probably. Those who are interested in turtle trading. Yeah, and
Yep.
Curtis went to the extent. I don't know whether I know probably you know it. Curtis went to the extent that he wrote a book named "Trading from Guts." So GUTS. So
Yeah.
he was talking about how to trade from guts when you are experienced, and I was wondering what type of book is this. But seeing his net worth and seeing the principle of Jerry's matching exactly with us, we are. I'm very happy that we follow the Jerry's way. Thank you very much.
It's actually the things that he used to get where he was actually quite amazing. And yeah. So he used some of these techniques, but these are some of the techniques that are a good way of actually not just being able to use your emotions, but actually also being able to distance yourself from your emotions. So very much what Tyrone was saying as well, identifying different things. So, you know, everyone talks about mindfulness and grounding and you know what, it's great to actually sit there and say, let's just look at, you know, 5 things we can see, blah, blah, blah. But yeah, that doesn't always work. So if we look at our trading strategy, it's turning our emotions and physical sensations into a supportive part of our strategy. So they're cues rather than disruptors. So we use them for our benefit. So when we do grounding, it's back to the moment. It's focusing back on the process, not the trade. It's not about, it's detaching yourself. There is no attachment to the trade anymore. And that's the only way. It's just got to be the process. I follow the process, therefore I have succeeded. Mapping the different aspects of your emotions. So for, say, a person who struggles or who does actually still feel those emotions in different things, it's knowing what actually means what. So like, you know, the sensations. Okay, so that sensation means that I'm experiencing fear. So that fear shows these behaviors and this is a particular trigger. So I have to either remove myself or I have to just step back. And again, you know, with that, sometimes we can't distance ourselves, and that's fine because we're human. If I had to try and invest in something that was medically based, I possibly wouldn't be able to distance myself either because I have somebody who relies a lot on that medical side of things. So I don't, although if I didn't, I probably wouldn't care and I just want to make all the money I could. I have a difficulty then because I feel that it shouldn't be, say, taken advantage of or different things like that. And it's different for everybody and you just sometimes have to accept that that's what it is. So linking components together. I actually do this. I have 2 children with ADHD and autism. And something that I've always had to do with them is tell them, okay, before you stop, before you press enter key on your computer for an exam, count to 5. Because the impulse to just like, oh yeah, I've done it all, and press enter and then go, oh my God, I didn't actually look at that properly. And I've made a mistake. And you need to actually stop and actually link particular things together. So breathing exercises, okay, before I press that enter button, I'm going to stop and I'm going to breathe. I'm going to do a coping strategy before I actually start trading in the morning, I'm linking particular things together and becoming a habit. Emotional equations I really like because it makes them become more scientific. It takes that attachment away. So if you look at fear, generally it's perceived loss and coping ability times by your uncertainty and your past experience. So what you could potentially lose, and are you able to cope with that? And is that bigger than how certain you are and what you've experienced in the past? And if you sort of make it like a mathematical equation or scientific, sometimes it can become easier to process. Curiosity.
That before curiosity, the fear equation is fantastic, Kerry. You are adding real value. This is brilliant. Perceived
So,
loss multiplied by uncertainty plus past experience. Absolutely correct.
and you know, there's equations for behaviors. There's equations for all different things. It's about you sitting down and actually, if you really, really want to, you can actually put a value on things and actually scale it. Depends on how dedicated you are. Curiosity is really important because it promotes reflection and adaptation. You can, if you're curious, it's like that kid that I see. Instead of actually attaching anything to it, he actually instead became curious about what he did wrong and what he needed to do better next time. The fear was gone or wasn't there. Cognitive reframing is pretty much what everyone tells you to do. Think differently. A good way of doing that is to actually bring everything back to the conscious mind, which is then to go, okay, what did I do? It's like when I said before, you know, think about it, your trade. Can you actually explain exactly what that trade was? Why did you make that trade? If you can't, you probably weren't there. Perspective is changing the way you see things. So success is not necessarily the end result. Success can be sticking to your plan. Success can be, wow, today I actually sat down and I had these things happening and I actually managed to not let them affect me. That's success. I suppose for this kid, apparently success was still being able to go to school and learn. And yet he still wants to go and do his scooter again. External influences. So it's selecting the influences that help ground you. We can have people say to us, oh my God, I can't believe that you're doing that. That's terrible. Why are you investing in that? But you have to just put that aside and select the things, take into your trading the things that help you get grounded and stay in that moment, and don't let those other things influence you. Gratitude is really, really great. It creates abundance. And I mean, I work in a community center. I see a lot of people who, and their mentality is always what I don't have and what I can't do. And it's different. We need to be grateful for everything that we have. And then once you start being that all the time, then you will actually start to see what you can do, not what you can't do. You can see what you do have, not what you don't have. And it's not just significant in trading, it's significant in everything that we do. And with your strategy in that, it is developing your strategy, and it is that precise, and that execution is that know what to do. Do what you've got to do. You've got your plan, stick to it. Curiosity comes into it. If it doesn't work, find out why, fix it, move forward. It's assessing all different parts of that and using those special parts of the emotional sensations to go, okay, I'm being told this particular thing, this is what I need to do. So if you see, say, a link between your internal state and an indicator. So you've got, say, anxiety with your high volatility. That could be a really good sign to start reassessing things and have a look if you need to reduce your position size. Are you going above what you're able to handle? And that's just emotionally as well as financially. That's not, it's across the board. So it's learning what the internal and the external is. So we're looking at Jerry again, and I said that he was able to put a lot of things aside. So he was really cool. I love Jerry Parker. He was awesome. So he used these things. He listened to his emotions. That's how he figured out that he did not believe that the risk ratio was correct. They actually did decide at the end that it was correct at 0.5. His gratitude, he was grateful for just the opportunity to actually trade and to do what he was doing. And he just put it all aside and went, you know what, I don't have the most money, but I'm just grateful for being able to do this and to try and develop skills. He stayed true to himself in that he did not care what other people did. Sorry. He didn't care what other people did, what other people wanted, because at the end of the experiment, people all wanted to do one particular group company. And he just went, no, I'm not doing that. I'm going home and I'm looking after my family, and whatever you do is you. So he went home and he did that for himself, for his family. And he selected his wife and his kids as his grounding and his external motivators. He always used them as, I'm doing this for me so I can benefit them, so I can be a good role model to them. He always had that in his mind, and he used a number of grounding things. It was difficult to see exactly what they were, but he did use a lot of grounding techniques, and one of them was actually his family and what he was getting out of things and being in this moment right now. And I think he's a really, really good role model in regards to that emotional side of things, in that he actually did use the emotions, he did accept the emotions, and he ran with them, but he also ran with his instinct, and he followed the rules exactly, while at the same time adapting them to suit those other instinctual aspects of him. And I think that is what that whole emotional or strategic emotions are, using them to your benefit. And has anyone got any questions? Comments even?
That is so informative. Thank you very much.
Cool, no problems.
That was so brilliant. Absolutely top class. Any questions to Kerry, please? Meir says thank you. Jignesh says thank you. Yeah, as usual, Kerry's presentation was brilliant. And Kerry is like Jerry. Probably she listens to the emotions, she has gratitude, she has curiosity, and she is grounded. Absolutely top class. And good to see Tyron with no attachments. You are staying true to yourself, true to your learning, and you are selecting the outside factors to help you. For example, the your learning process through Traders Foundation and Traders Beginners, and which has resulted 18 successful trades out of 24. Tyron, congratulations again, keep it up. And I hope Ben and Andrew, all others who are doing the Gautam and others, I don't know whether Vijeta started or not, who have started the prop trading, prop trading with different organization. We used to provide prop trading because from 2019 to 2024 January, but we need to stop because of thanks to ASIC, some regulatory changes. No one can do it in Australia. But anyway, before I request Simon to come and present his screen and take us through the knowledge of how to do wealth creation through SMSF. Anyone, you can share any question, any thoughts on your how's it going, how you're feeling, how you can relate what Kerry said to your prop trading experience. Anyone, if you are willing to share, you have 30 seconds to think and then 5 minutes to talk, please.
Although you can also email me if you want to.
Yeah, absolutely. Take brilliant. Take help of the brilliant. I always praise Kerry and Marty. They're so detailed. So they're so thorough. We are extremely privileged to have both of them with us, and Simon would be helping us today as well. But anyone, don't hesitate. We all have emotions, believe me or not. We all have attachments. With due respect to tyrants, no attachments. That is good. But we all have everything: greed, fear, crack in discipline, crack in control. We all have everything. But if we want to fill in the gap, if we have to fill in the cracks, we must take help of Kerry, and that's for sure. We need to don't hesitate to contact her at kerrybrown@npfinancials.com.au, and she can definitely help you. And the bottom line is, she would not be sharing your issues with anyone else. So don't get afraid that the universe would be knowing your problem. I have problem. Everyone is having problem. We are working on it, and we'll be working on it throughout our life till we breathe. Thank you very much, Kerry, and welcome, Simon. Thank you, Simon. You can get started sharing your screen.
Okay.
Kerry, if you can stop presenting. Thank you.
Thanks, Partha. Let me just get this up.
You have the middle up arrow within a box at the bottom, Simon, to share your screen. At the bottom of the screen.
Okay. Hopefully that.
Yeah, we can see your screen. You
Yeah,
can reduce the left hand side, so that would be great.
Yeah, you can still see that okay?
Yeah, we can. Yeah.
Yeah, fantastic. Okay. Look, thanks everyone, and thanks Partha for inviting me to come on today. Just a short presentation, and look, some of you may have varying knowledge on self-managed super funds, but I just wanted to cover the basics today, and obviously answer any questions that anyone has. But effectively, it's what I want to cover off is how to be able to use your money in super to be able to trade exactly what you're learning through at the moment through MP Financials, and that's done through a self-managed super fund. Just a quick disclaimer, obviously everything today is general in nature, and obviously none of your personal circumstances have been considered. So just very simply, a self-managed super fund is a super fund. You can have up to 6 members. It enables you to have a much greater control over what investments you have.